Okay, very good. Thank you so much for your patience. This is Ken at Tortoise Capital with the nightly strategy podcast for May 1st, 2020. I want to say shout out to my dad, the senior tortoise, rest in peace, watching over us from above. Um, just, I got to tell you just how easy it is growing up when your dad smiles at you like this. Let me show you that. It's one of my favorite pictures of him. So this is a picture of my dad. He's the senior tortoise and it's easy to go for it when you got his undying affection and support. Just can't tell you how lucky I am. This was part of we were doing a little email exchange today. Guys that are in the military college doing our distance learning in this time of the virus, we've been sharing screenshots of our work areas. And today the tasker was to take a picture of the space right in front of you, just north of your monitor. And so this was mine. And these are all within arm's reach. So this is just what's on that top shelf. And if you just notice, we have Sun Wukong, the Monkey King. We have a stockpile of small arms ammunition, 22 long rifle and 38 special. That 15-6808 is a tactical folding knife still in the box as a spare. I have a couple books on Nikken philosophy and some Zen Buddhist riding the ox home. That's the 10 ox herding pictures. And then Tools of Lodging for the Moon is all about, and Flowing Bridges, Quiet Water is about Nikken philosophy, about a practical, almost Japanese stoicism, a realism, non-denominational. I think it aligns pretty strongly with stoicism in my mind. A couple home study courses, how data analytics are transforming the world, and then mind-bending math riddles. I'm trying to stay one step ahead of my son, the mathematician. Some little tortoise icons. Our ceremonial coin there, win the race, make haste slowly, and my dad's icon, the owl. And then our this is a coaster we had made up, and it's made out of black coal from anthracite coal from Wales, where my dad's family grew up, all coal miners and probably horse thieves, so they don't talk about that much. Before they came in the late 1800s to United States, working the coal mines and the steel mills and so forth. And so there's our tortoise icon, and then the owl is my dad's symbol. The Samurai Trilogy, the story of Miyamoto Musashi, and then an outstanding hentai, the Ghost in the Shell SAC series is amazing. So that's what the top shelf of my office looks like. Strong connection to my dad there in the owl meditation. So those of you that have experienced that or are going to experience it in the home study course for the hybrid trading, I envy you the first time you get to encounter that. So happy birthday, Dad. Thanks for everything. All right, let's shift back to our regularly scheduled program. Okay, so this is our daily market health check, and let's see where we are. So yesterday, you will recall, we had observed this. The RL10 had rolled up. It peaked 2 days ago. And then yesterday was an orderly selling. It had an inside day gap open, small range, sold off slightly, and finished the day above a rising RL10 and well above the dragon, and all the the RL30 extension, the PSAR extension, and the Dragon extension were all rolling up. Today, however, was the second day of selling after an effort to put in this third leg up. You'll recall we've been talking about leg one terminated here, leg two terminated here, and leg three, we were wondering if it was going to get to the RL270 long-term fair value, which is up vicinity Z2, the Bollinger Band, +2 at the edge of the floodplain. And today was a gap down, which continued that poor close from yesterday. It made an effort to run up, and then just sold off the whole rest of the day to close poorly, deep into the dragon, through the spine, and barely held support here at the dragon bottom. And so we have the low of the day here, the dragon peak and belly, the PSAR flip, all a strong support. Let's look at our support levels here. We have low of the day, dragon bottom, the PSAR flip, the 10-day low. That's solid support. The Bollinger Band mean, river is still rising, and the Bollinger Band mean is playing catch up. It's rising faster than prices right now. So we're starting to lose some mojo in the short-term momentum. The RL90 is about at the 6 o'clock position, starting to roll up a little bit. The RL10 belly from the end of the first leg and the start of the second leg here, the Z1, and then below. On the way up, we have the high of the day. We have the 10-day high and the 30-day high here. Oh, I should also say we have the peak of the RL10. That's really the peak of the fair price, and then the high of the day is here. So there was a considerable move down. We have the 10-day high and 30-day high right here. Here's our 10-day range, fair value, and then Z2. We're just rolling into the fall today on the basis of the poor closing. So the summer season, which really started in the middle of that second leg, has terminated here with a poor showing and a poor close going into the weekend. Two ways to look at that. That's the second day of what could start to be a sell-off that will test these support levels, or it's just prudent risk reduction going into a long and challenging weekend. Each of these weekends are now more like a 48-hour opportunity for negative news to come in and punish the longer-term positions at the Monday open. So it's one of those two things. I think I'm torn between either one of them. It doesn't really matter, but I tend to favor the risk reduction going into the weekend with no good reason to hold over the weekend. So when we go through the speed run here a little bit later, it's going to make those professional disciplined exits from yesterday look pretty good. So that's where we are. Let's take a look at the sectors. Mostly selling today across the board. So we'll start with the S&P at a disappointing minus 2.65. What was better than the S&P today? The Dow at 2.4, EFA at 2.1, healthcare 1.9, Japan 1.7, Silver minus 0.4. Treasuries had a fractional gain at 0.7. Walmart was about the only stock that finished in the green out of our Dow 30 stack. So yesterday it was the only one that had cracked, but today it's the only one that had some gains. So maybe it's finding a bottom inside there. And then we're going to have a very interesting case study in SPCE, the Virgin Galactic, then the triple inverse oil, and then wheat and precious metals put in a strong show as a defensive play going into the weekend. And then what was worse than the S&P today? Technology, finance, lumber and real estate, emerging markets and small caps. So the small caps, second day of strong selling at -4, which puts the triple inverse at minus 12.6 or 11.6, excuse me. Brazil and Mexico gave it up. Cliff, Caterpillar, Simon Property Group. So that infrastructure plays that were so strong yesterday, which were the only source of strength in the market, couldn't hold it today. And so when even that strength collapsed, down it went. There's Boeing and energy and clean energy altogether. Even Amazon minus 7%. Tesla down 10, Devon down 10.5. So a broad-based selling today, and that feels more like a market hedging, where we have a broad-based selling. This was not localized on sectors or companies. And that really makes Walmart's move all the more encouraging for next week. Being able to put in a 1% up day when all the sectors in the market were down 2 to 3%. So Walmart will be one to watch as an anomaly. Yeah, dear, I'm on the web.
Okay.
What you got? Okay. So just a preview of coming attractions. As you know, my master's is in systems management, the practical application of systems thinking, which finds that intersection between the worlds of the MBA, the HR person, and the computer person, all with an idea towards creating robust human-centric systems that can leverage technology and people in a sustainable way to create value. So a very practical, applied Master of Science degree. And I've been doing that for, let's see, I graduated in 93, so almost 30 years. And an amazingly useful and high payoff set of skills. Van Tharp has been developing some systems thinking applications on as well at VTI. I helped him design the initial workshop they did on systems thinking. My approach to systems thinking is grounded in the academic literature in the world of practical, professional, commercial systems. Van, I think, has extended it another level into the world of spirituality and cognitive programming and emotional realities and perception. So he's done a lot of interesting work kind of on the psychological element. I think the compare and contrast and the mutual support of those two things make for a very interesting approach. And I'm pleased to see a lot of that is incorporated into some of his new ideas in the Super Trader program. What I'm going to do is add a course to the learning management system for the hybrid trading course, but also in the LMS, that explores in detail this systems thinking 101, which is the essential habits of what these guys at the Water Center for Systems Thinking produce and promote. They are absolutely sound. They have a very strong presence in the world of undergraduate and K through 12 education, and the elements of thought that they've identified, the cognitive skill set, and the patterns and metaphors and flashcards that they've developed, I think are first rate, and it nests nicely into what Van's teaching and what I went through in my graduate program. So my initial intent is to make a presentation of the Systems Thinking 101 work that they've done, and sort of create a baseline course on systems thinking. It is strongly connected to business process reengineering and supply chain management and strategy mapping and process mapping, which you see me doing all the time. And so I just think that these are core skills that would serve you well. And so I want to get that stuff in the can and documented while I've got some time here working from home with this in this time of the virus. So you can look forward to that coming down the pipe. I see Eugene and Lisa here. Welcome, Lisa. I'm going to merge that course 107 and 108 into the daily and weekend reports, and then free up a space for a systems thinking course. It's not directly relevant to the hybrid trading. There's enough technical material there, but in longer term, this is one of those developmental bodies of knowledge that will do no harm and will certainly help you, I believe, in becoming creative and systematic in your approach to challenges. So that's that. That's coming. I am going to try we'll try the speed run right now and just see how we're doing. See if this wants to cooperate. And mostly we're standing by and observing today, because yesterday was the termination of a lot of ventures on the long side. And so we're going to see most of that today. So like yesterday, for example, well, actually, I should say 2 days ago, I just want to give a detailed example in Alcoa and talk about this in the continuation. So 2 days in Alcoa, we had a gap up, and as a result of a really nice intraday move, let me try to get this out of the way for you so you can see. So as a result of a really nice move, we were able to start off the day with a hybrid frog turbo trade, and then that was going so well that in the afternoon when we saw it peak, we decided to keep a piece. So we sell 80%, and then I've got my plan here at the blue line. Let me get this out of the way. So what we did yesterday, or I should say 2 days ago, was put a stop halfway from the top to our entry and said that was going to be our alert for the next day, yesterday. And then we would play the swing trade from there, funded by the intraday move. Well, what it had was a minor gap down and then started selling off during the day. And so it went through that alert. We went ahead and sold that position. And then, our actual capture was this green box, as if you will recall, from the entry to the exit. We captured the green against an initial risk, a very tight R of this location. And so we're able to do that because of that connection between day trading and swing trading. That's core and turbo. You'll recall that we said what we left behind by not exiting at the peak of the day 2 days ago was this red box. That was the maximum favorable excursion. And then we ended up having to give back that tiny little fraction from where it opened and until it sold off. So our basic capture was the green box over the risk of the yellow box, so maybe a 2-to-1 or a 2R execution risk capture. So still not bad. I wrote yesterday's coaching exercise was to take you through the reinforcement of professional feelings. And if you went through that exercise and repeated it and then did the narrative out loud and you have an experience to share, I'd be happy to hear about your experience, to see how it went. I think it would be very beneficial. So when we get this exit here, what it does is protect us against the rest of the sell from yesterday. So that actually reinforcing the positive feelings of exiting at the positive point. The point of all this was that the decision to hold it as a swing trade was made on the way up, and then the decision to hold it overnight was made in here, and then the decision to exit was made right there. Those three decisions were all made in a professional manner, and that's the professional feelings I want to reinforce. Those are good decisions because at the time, those were very good decisions based on risk and reward, opportunity and risk, and based on the asset allocation. The fact that the rest of the day yesterday was a big sell-off, and the fact that today was a second big sell-off doesn't make those decisions better, because that potential was always there. And that's why the professional trade framing takes those potential kinds of moves into it. There was nothing surprising about this 2-day sell-off. It's still in an upward trend. The RL 30 and 10 are still sloping up. The dragon's sloping up. And price didn't penetrate through the dragon. So technically, with the MACD above the zero line down here, this is still in an uptrend. So these 2 days of selling are still technically noise. That's part of the normal oscillation of price. So it wasn't the fact that we happened to avoid that particular sell-off that made this good decisions. It was the fact that the process that we applied and the discipline that we used to execute it and the amount of risk that we elected to take, in this case, using markets' money from the earnings on the day trade to fund the overnight risk, those are the things that made that a professional series of decisions. And those are that's the source of the positive feelings that we want to reinforce with yesterday's psychological exercise. That's a really important point to understand and internalize and to reinforce. And like any new neural pathways, you've got to actually reinforce that over the matter of a couple weeks on a daily basis to really lock in those lessons. So it just so happens that Alcoa also sold off sharply today. Now, we don't have a position in it, but I wanted to reinforce that lesson and give you kind of a day one, a day two, and a day three debriefing, and then put all of this into the context. So in my mind, I think of this whole series almost as like a 4-day, 4-day adventure. The first day where it broke out of the dragon and had a nice big range expansion up made us really well prepared to take advantage on day two of the intraday hybrid frog and then keep a piece because it was working. Day three was the test of the swing, and it just elected not to. It failed, which is not surprising when the market is in bare normal conditions after all, and in the third leg of a 3-leg move off of the low. And then day four was just kind of a confirmation that, yeah, this bear is still alive and kicking, and he can bite your head off if we're not careful. So we want to be mindful of that going forward. And now Alcoa, this little story, this 4-day story of Alcoa is going to be reflected in many, if not most, of the symbols that we go through on the speed run. So I take the time to explain that one there, and then I will be brief on the other ones, okay? Apple, again, yesterday we exited. Yesterday, we exited in here. And today, Apple was a big mover. We were just observing it, don't have a position on it. But there it is. It looks actually favorable. I think, yesterday they had their earnings and I think Apple's still around. The fact that it was able to finish positive while the rest of, while it had a positive move to the upside in the middle of the day, it's still, it was half the loss of the S&P, and the fact that it was able to close higher than the open, and there was a lot of buying pressure in it, but ultimately it couldn't buck the larger trend, and that's why I think this was a lot of index and tech sector selling, which would tend to undercut Apple's momentum. But the fact that it was better than the S&P and better than tech, longer term still makes me optimistic. And you'll notice that it is out of the dragon, and so it's relatively more favorable than than the S&P. So I would actually be ready to buy this if it breaks out above the RL10. And I'm ready to trade it as a hybrid frog, especially if it's on the long side on Monday. So Apple should be on our short list. Amazon gave back almost 8%. It cracked, went through the PSAR. And so this really tips it over into the negative. Now, this is an unambiguous move. This is a P1 outside the river. Now, you should be hearing a little voice in your head saying, what pattern am I describing? So here's a check on learning for you. What's the pattern that you hear me describing right now? Unambiguous move, RLCO outside the river, the RLXD, when it crosses, on Monday, it's going to be an RLXD right here. The dragon has already started to roll over, and the 90 will roll over on Monday. So what that means is, those of you that were playing along at home, that's the owl pattern. Yes, Eugene, correct. So one of the things that we could set that up right now would be this. To me, any break below the low of the day is an automatic short. And then I'd be looking at, when you look at the size of that move, it could get down through the RL90. I would add a position. And if it broke below the Bollinger Band mean, those are all places where I'm going to automatically get short on Amazon if it continues to sell off. Now, is this a one-day spike through the PSAR and then everybody wants to buy Amazon on sale because of all the companies in the world? The one that is best postured to take advantage of any recovery in the economy is likely to be, yes, Amazon. So I would actually be willing to buy it on a retracement above the PSAR and the dragon skin, or the southern skin of the dragon. So I'm actually looking at this as a buying opportunity on the upside. So what that means is I'm putting this in a critical state because there's a strong argument for a large move in either direction. I would like to see it open inside today's range. And then if it votes north, I'm long. If it votes south, I'm short, using today's range as the initial execution risk until I can try to get, a tighter stop intraday. But in terms of a swing trade, swing trading one day at a time, that's really the trade frame that I want right there. Aussie dollar. So this exit yesterday is really looking smart. But that's not why we feel professional. It was still the right thing to do, as I said before. So it's back inside the trading range, and this is one where I think I'd be willing to trade that in either direction, because this is the Aussie dollar pair oscillates pretty nicely, and now my target's going to be down here by this red line, which was the, I think, like the far side of the river is kind of what I'm looking at as a target. First step being it's going to get back to the Bollinger Band mean and then to the far side of the river. So I think that's how we play that one. Boeing, we're just stalking that one, sideways, choppy, and weak. Good intraday candidate. I wouldn't trust it long term. Caterpillar voted negatively. That's really a bad sign for the materials and the recovery and the global slowdown. That's going to get hit hard by earnings. There's more downside in that one coming, and so that's a frog champion. Look at the nice long legs it makes on its directional moves. There's a couple that I want to just show you. This is why Caterpillar is a beauty of an intraday trader, because it's not a groovy tech stock. Here's a case where on the long side it opened and had this beautiful $3 move. This is one where it opened at the top, sold off, nice rebound. Then it opened at the bottom, had a nice, beautiful long run and sold off. Notice how the opening is almost reliably in the top or bottom 10%. That's one of the characteristics of a frog champion. So Caterpillar, and it was a beautiful short side trade today. Not going to spend a lot of time on it, but here's the, this is what that rascal looked like intraday. Hybrid frog, anyone? So you start off with the 5, the OR5 is right here. That's the opening 5 minutes. And that's a 75-cent box. So about 0.75%. And then your automatic short is here when it violates through the VWAP. And you're not going to lose money on that trade today. And as long as you're watching that VWAP declining on heavy volume, and you see all this volume accumulating, the trade from here to there and then an exit in a relaxed manner is easy. And then a resumption on the Z3 pinch breakdown here for the second leg. I mean, Caterpillar is a frog champion for a reason. Frog champions. Nothing wrong with them. All right, back to the swing. Avoided nice loss in Cliff, and the exit up here yesterday is looking, again, looks and feels professional. That's what professionalism is supposed to routinely protect you against. This is not even a reason to be amazed. This is a reason to be professional and to treat this as normal behavior. This little trade structure was poised to go well if we were going to win big if it was right, and we cut it short if it didn't work. No harm, no foul. Cisco, it's just mucking along here, and again, the exit yesterday for a fractional win sure feels a lot better than eating this, from an entry at the green line. I'd much rather take that fractional win than eat 2 days of misery. Lumber rolled over. Profit preservation worked. Chevron and the whole energy sector cracked today. The Dow is back inside its trading range. Devon Energy rolled over. It had less pain than the others, but even though it was a relative strength leader in the energy sector, again, notice our professional exit here allowed us to make bank on 1, 2, 3 positions and make bank on all of them, and then sidestep this misery. On the upside, it just barely touched the dragon, so it still retains its strength. So we will treat that one like the hybrid frog champion that it is. Emerging markets just got slaughtered. EFA suffered as well, so that fractional win in EFA again feels real good. It's all the way back into the middle of the dragon, which is rolling over. Again, notice in the special case of Japan, EWJ, where again the most of that price action is occurring in the gap and not during the day, but it's already below the PSAR and its run is done. Mexico got smashed today, minus 4%, and it's not cooperating. Looks like our connection is slowing down, so I'm gonna finish up the speed run starting with Mexico and make that part of tomorrow's report. I'm going to do the reports tonight and record the speechification, and then I will do a reading of the reports tomorrow, especially for the folks on the hybrid trading workshop. Eugene and Lisa, I'm going to do a long, slow, deliberate reading of that tomorrow as part of that course number 107. So that'll be a chance to really, you'll be able to study those, and then I'll talk about it tomorrow evening. So listen to the video tomorrow, and if you want, and then you can ask me questions, which I will answer in tomorrow night's presentation. Okay. I want to shift now. The last section I want for tonight is just a reminder that when we are trade framing, here's the flashcard on the trade framing process. These are the questions that we ask of every trade when we're designing our scaffolding, when we're examining the reward to risk ratio. This causes us to look at each trade in a systematic way, to separate our feelings from the objective descriptions of what's going on, and it plots out all of the key decisions we're going to have to make, to include how to get in, how to get out, how to manage it. Do we stop and reverse? If we get out, where do we re-enter? All of these standard questions become the way we approach every single trade. After you do about 100 of these in writing, it will be ingrained in you to such an extent that you can't stop thinking this way about how to structure your trades. So what do you see? We're talking about the things that, in terms of the specific indicators, their behavior, how to interpret it, and then what sense to make of it. What could it do? So we're really looking, how far could it go reasonably in either direction, and what would be the limits of the rational, reasonable move? Is there a feeling about which way I want to trade? And is there a decision that I can then rationally make about which way that I would trade? Because we're going to frame it in both directions, but we might make a decision to trade it only one way or the other, or both, or neither. So that's the rational response. Where would we enter on each side? Where would it fail? In other words, if we were going long and we had a decision to enter in a certain way, what price would we have to see in order to invalidate the hypothesis? So that's going to be our execution risk. Then if we entered and it then immediately failed, would we stop and reverse and go the other way? So that gets us through the first round of every decision. The second set of questions is, on a win, so I'm now holding something like an average win or better, where would it stall? And where would I start treating the trade money as mine? So at what point do I start being more concerned about preserving capital than I am with holding out for more gains? Once I take a profit preservation exit, or if it's stalling, even if I don't get out, what's the next leg look like? So if it holds there and doesn't kick us out, where could it continue to go? But if I did get out, would I stop and reverse from there back to towards the entry? But then if I got out and then it immediately resumed the same trend that got me in, where would I re-enter? And what that's asking you basically to do is ensure that you have a price ladder that supports those decisions about where you still have a 2-to-1 reward to risk, and you always know what the multiple legs of the move are. So those are the ideas that will help shape our thinking in this next trade frame. Okay, so we're going to take a look at Virgin Galactic. Now, Virgin Galactic was, so that is a speculative tech play. It's like a poor man's Tesla, and we have been turbo trading it and swing trading it with some success all the way, really prior to the start of this melt-off, then all the way through the meltdown, and then recently on the rebound, we've been trading it successfully. It's high tech. It moves a lot. It's very directional. It's it's inexpensive, so you can get a big position for not much money, and it's a intraday trender, so has all the qualities of a frog champion. So here we are. At number one, you can see what we've done is I've taken the OR5. I'm sorry. This was area number one is where it closed. That vertical blue line is the close of yesterday. I wanted to show how tightly it pinched yesterday for that. We're starting to think about how to create manageable risk boxes. So today it gaps down, And in the first 5 or 10 minutes, it makes this box. It makes a swing low on the RL10 at 0.2 and then a swing high when it comes back to the PSAR. So it establishes about a 30-cent range. Let me make that a little larger for you to see. That's a little easier to see. So this box number 1 was the Z3 pinch at the close of the day, and you can see the VWAP was right there. Then it gapped down to here. And then in the first 10 minutes or so, here's a swing low in the RL10, and it crosses back above the VWAP. Here's the VWAP for the day. And it moved this high and now has rolled over. So now we have something like an opening range 5, if you will, or a minimum manageable risk box of about 30 cents. There we go. All right, so let's go on now. So that's what we mean by box number 2. It fails out of the box at 3. On the bigger chart, I'm not going to keep doing this, but when we get down here, what I'm going to come back to later is to show that it's below the MACD line, and although we're in the spring, the fact that that thing is starting to fail while the rest of the market has gapped down and selling off, that overrides the fact that in the spring, all the spring means is that we can tentatively think about getting long, but the other conditions in the market have to support it. But we're mindful of that. So, and it's good practice to always look at what the MACD 4 seasons conditions are when you make your action decisions. In this case, the most important thing was that the opening range got violated. And you'll also notice that I've drawn that line across from the belly of the RL10 over to here, and that triggered me to get short. In your mind, what pattern is that? I'll wait 5 seconds. Luke, type it in. You should know this in less than 5 seconds, Luke. Correct, the collapsing dragon. So when we play that collapsing dragon, again, let me pull my stop down here. When I get short here, a reasonable place to put your initial stop is up here above the previous hump of that RL10. If you were here, I would accept that, but just realize a good chance of that thing failing. So I don't mind a 30-cent initial execution risk. If I was down here, I would not use that as an excuse to get twice as large. That way it leads to madness. So I would be willing to accept that. Now I want you to notice that we're now 30 minutes in, so now the overnight gap is factored out of the Bollinger Band, so they collapse pretty quickly. Now the Z3 lines have compressed here. The RL10, the 90 are in, and the 30 are all tightly compressed inside the river. And you'll notice that the RL270 is coming to join. This is getting close to already becoming a Z3 pinch. We're still short. At 4, we have a PSAR flip, and it just never failed. It gave it 10 bars to fail, and it didn't. So I just scratched the trade when it gets back to the VWAP. This is failure to fail. This is already feeling weird in Virgin Galactic because it's doing well when the market is not doing well. So most unusual. That's what happens at 4. We exit. And now we notice here at 5 that the Z3 lines have continued to pinch much more tightly than here. And now this little pinch box is about the size of that pinch box. So that's about how much noise there is on this thing intraday. And that's feeling like the minimum manageable risk box. At 5, I noticed that the RL10 kind of reinforced this low, both of those at Z2, edge of the river, and now the PSAR has flipped, but still dominated by a sideways quiet change. At this point, I'm ready to play the breakout. Now we're at a Z3 pinch, and the RL270 is in. We now have a super pinch. Everything is inside the boxes. That box continues to get even tighter at 6, and it fails at 7. It fails outside of the box, and so now we're short, and that's a Z3 pinch breakdown. And you'll notice that just earlier it had gone into the winter, so now it's deep in the winter at 7 and 21. So this little weakness here, I wouldn't fault you for getting short inside here because the MACD histogram was in there, but I actually would prefer to see you wait for the actual Z3 lines to get violated, because that feels like the start of a move. And there's not much difference in the level of entry on that one. So 7, we're short. And our stop now, we could put it like at the opposing Z3. I would be willing to accept the VWAP. Let's try the VWAP. Either of those is acceptable for execution risk. Okay? Feeling like it's moving in our favor. At 8, the initial volatility that this generated caused the Bollinger Bands to get wide, and then because it's such an orderly progression down, we're good to go. You know, somewhere in here, even if you just follow the PSAR down right about in here, you know, and put your stop like right there, you've locked in this much of a gain. You know, our initial short was from here. So you've locked in the gain from the red line to the red line against a risk probably that was up here. So you got about half an execution R in play. So now our Z3 lines are pinching. It breaks down immediately again. I want you to notice that this looks like a breakdown of the Z3 excursion. So this Z3 line was the previous excursion, and then right in here it breaks down. So 9 is a continuation play short. And now what I want you to notice is the very important MACD histogram now. It went winter, spring, and then it couldn't even get to the 0 line, and then went winter. So winter, spring, winter, as we know, is an auto short. Okay, so now we have 2 positions short, collapsing nicely. By this time, wherever my stop was up in here, I want to have it down here, so that now I've locked in 2 positions to the short side, and I'm not losing any money, and now we are postured to make a nice big bank on what is the beginning of a runaway move on a very volatile stock that yesterday moved 10%. Third position short, I want you to notice down here in the MACD histogram that that winter became a violent winter when it broke out below the Red River. And so this is really just, if you needed more confirmation, this consolidation. Hey, in that consolidation, if you had moved down in here and locked it in, hey, even if you decided to cash it in here, you're still holding a pretty nice trade. So we get a third position at 10. And I scratch this one after this leg down. It gets out past the Z2, then gives me 1, 2, 3, 4 into the dragon, hits the PSAR, so that negates this one. That's a scratch. And I want you to notice down here that the winter became winter became spring at 22. It was incontrovertible, and it had rebounded. So now that little RL10, the belly of that is a support level. If that cracks right now, then that's a collapsing dragon. We're going to get short. But this one is the end of that trade. The short 1, 2, 3, and then all out. So good trade. Properly executed. At 12, I want you to notice that MACD histogram has rolled through the Red River and is almost in the summer. And right about where we're entering, it's just about the summer. So here's another quiz. Unambiguous move, P1, RLXD, dragon rolls up, RL90 rolls up. What kind of an entry is that green dot? 5 seconds. Luke, 4, 3, 2, 1. The owl. Scratch. Did not follow through. Notice the MACD histogram rolled over in from the summer into the fall into the Red River, and at 24, it's testing the 0 line. So scratch. If it was going to work, it was going to get up here to the VWAP and beyond. This was at turning point. Never happened. There's the P1. Now what do we have? Unambiguous move. P1. RL crosses the dragon. Dragon rolls over. 90 rolls over. This is at least an owl exit. I wouldn't be offended if you got short at 13 and called it an owl in order to respect that the primary trend is down. I would not be offended. I scratched. Now we're getting into the lunch period, so I'm not in that much of a hurry. I now notice this very tight compression in a sideways quiet channel and a Z3 breakout at 15. It failed to fail. So even if you took this as an owl, the fact that it didn't work, somewhere in here, you're covering it, or maybe you just exited here. But I was basically just waiting because it was lunchtime. And now I notice that it does a Z3 pinch breakout. So off we go. And marginal loss when it crosses below the Bollinger Band mean. I just go ahead and take that fractional exit there. And you'll notice that the summer didn't last. It went into the fall. So it was already courting disaster. And when it's in the lunchtime and in the chop, there's just not much there anyway. So that's not one you believe. It's either going to work right away or it doesn't. Now, in this blue box, I want you to notice, so I've made it blue because this is the end of one chart, getting ready for the next chart. So this blue box is an even tighter sideways quiet channel. Look how tight this is between the Z3 lines. There's the VWAP. Look how tight that channel is compared to the previous one and the previous one. So this is extraordinarily narrow. The width of that box is 20 cents. So that box is 20 cents. All right, so that's round one. Round two. So now it's 1:45. We're back from lunch. Here's our 20-cent blue box. There's our VWAP. Let me draw my big fat line here. Lisa, this may all sound like great to you, but as you start going through the course, and you'll pick up the language and the concepts. So we have this Z3 pinch. That's one of our 5 primary patterns for the hybrid trading. And there's our VWAP. Come on. Now, it only took 2 bars for it to get back above the VWAP. It's possible to have gotten that if you had framed that trade tightly. I didn't. I wanted to see it get above the VWAP, so I entered at the VWAP and just put my stop down here. At this point, because I let it go that far before getting in, I'm willing to take, let's say, the edge of the box or the PSAR. I'll use the PSAR as a reasonable stop. That's still only 30 cents anyway. So if I'm risking $400, a 30-cent risk is 1,200 shares. Bam. Second one, a money management entry. It already, the size of this chunk from here to here, one big move all the way up. It held, it's going up. So I just go ahead and drop the second one in, bring my stop up into here. So even if this violently reverses against me, I'm still net positive. But if this thing works, the next thing I'm going to do is try to figure out how to get my next stop in and jump it up from here. Come on. I'm going to try to figure out how to jump it up from here and just lock it in like a mountain climber, putting in protection. So that's the next thing that I got to do, is figure that out. So we've got 2 positions in. There it is. Locked in. Now we've got 2 positions in with lots of momentum, and the rest of the market is just getting crushed. But this thing is the anomaly. So our job is to find the mover. Third position, and then it goes against me sharply. So now, again, when this exit negates that entry, so we end up getting these 2 nice positions in. Now I want to just show you something here on 1,200 shares. Whoops. So that exit is at about 1780, and the 2 entries. $17.20. $16.50. So that is $1.30 on 1,200 shares. That's $1,500 on the first position, and on the second position, that's about $17.15 to $17.80. That's about 65 cents on 1,200 shares. That's another $700. So that's $2,000 on 2 sets of $400 risks. So you don't stick around long, and you're willing to cash. This is now an owl short, because that felt like unusual behavior. That was speculators buying a very thin, narrow tech stock while the rest of the market was being crushed. And all I can see is the VWAP back here and then the previous support level. So that looks like a chance to capture from here to here on this retracement. So I'm short an owl. Didn't follow through, so fractional win, Z3P. There's another breakout quick here. Notice that it didn't fail, crossed into the summer, so we're long with a stop here. I'm going quicker because this is routine and I want to get to the actual homework assignment. So there's my initial stop. Coming up on 3 p.m. and there is the fractional gain. So that's that. Now here is the here's the homework assignment. Okay, so I want you to notice that between the previous set of short side trades and then this set of long side trades, we're holding probably 8 to 10 R. So if you're trading at $400, that's somewhere around $3 grand. So here's the situation that we find ourselves in. All right. And I'm going to zoom in, and now I want you to listen along, because your job is to decide what your trading plan is going to be 15 minutes or 10 minutes before the close. And this is that last trade that we just did. So I want to show you this real quick. So this was that short side series. So we made bank on that two position short. And then we had the breakout in here and we cashed. And then we had this little fractional win. There was an owl that pretty much scratched and didn't do much. So we had the rest of the market was selling off. And so here's the narrative. So market conditions. On the second day of an orderly sell-off, with more volatility than yesterday, and the markets are resting right exactly on a critical price support at the bottom of the dragon, and the dragon and the MACD are rolling over, while all the other leaders from yesterday sold off, somehow SPCE, this symbol, bucked the trend in the afternoon with a powerful move that closed well in the last few minutes. And you made good money intraday with the turbo technique. You made $2,200 to $3,000 in both directions. And you're going to notice that there are 3 observable support levels from our markup. We're going to see that in a second. And there you are. You have 5 to 10 R in hand from intraday trading, which let's just say represents $2 grand for the day. And now your last trade looks like this. Your last trade is this green dot. You have 500 shares entry at the green dot, and your initial stop was this lower red line, and you entered at the green line, and now you just put your stop in at this red line. Okay? So let's read that. Let me let it come up on your screen. So here we are. You have 500 shares. Your entry was at this green dot at 1770. Your initial stop was the red line below the PSAR at 1750-ish. So you're risking 20 cents on 500 shares. You only have $100 at risk. The current price, this dotted black line, is $17.95. And your current stop you raised up to this line here is at $17.80. Now, you got 10 minutes before the close. If while you're thinking this price moves against you and hits your stop, you're going to exit that trade and earn $50. So that means your stop is at no lose plus dinner for 2. If you decided to exit right now and take $17.95, you would make $125. which is compared to your initial risk, that's 1.2 execution R if you just decide to exit now and just take what you got. So what's your decision? What's your trading strategy? And now see part 4 of the daily chart with planning data. So this is we're now in the position where we started the day and played turbo and made good money, and this thing closed well, and we're holding 500 shares that are a little bit in the money, but the rest of the market sold off on the second day of a miserable 2 days selling, and it's a Friday, so if we hold this, that means we're holding over a weekend. So you got to make a decision about what to do with those 500 shares, and you got to make a decision about what to do with SPCE longer term. So here's the other chart that you have in your trade packet and a reminder of your trading process. Now what I've done is I've gone back all the way to previous swing moves, because we're not only thinking about the intraday move, we're now thinking about the swing move. So you have this measured support level at the hump of the RL10 and the original PSAR flip, and that is at $37.99. So that's $38. The hump of the dragon back here is $33.60, and so on. The this one is, what is that one? No idea what that is. Misplaced. Halfway up the stack, I guess. So this hump of the RL10 is at 1980. So as we look now at the dailies, and now you have all the digits on this, so you can zoom it in as much as you want. So now we have the PSAR flip is at 1980. The RL90 and the RL30 are at like 1880-ish. Let's see, the daily high, 1820. It closed at 1792. The low of the day, 1730. Belly of the dragon, 1732. The RL10 belly, 1670. The low of the day at 1549. So this thing moved from 1549 as high as 1820. Right? So that's $2.80 worth of move right now. Is not an abnormal move. Look at the size of this move. So that's what it's been doing on a swing. And you notice it had leg 1, 2, and leg 3 just kind of petered off. But today had this amazing rebound while the rest of the market sold off sharply. And it's already pushing up through the top of the dragon. Maybe that's going to be a momentum play to go to the upside. So here is your mission. Your mission is to come up with a trading strategy for core and turbo. What do you want to do? What you have is you have $2,000 in hand of markets money that you made on that good intraday trading that we just went through bar by bar. You earned that money with your skill. And now you're holding 500 shares and you have about anywhere from 50 to 125 bucks of a little bit of profit in hand. And so you can decide to get out all or some or none. You can decide to hold all, some, or none over the weekend. And then you can have a strategy for what you want to do on Monday. Wait and see, add to the position, buy at the open, put in your alerts, whatever you want to do with that. And based on how you understand my ideas of core and turbo, you have an opportunity now to develop a trading strategy for what to do with the problem. The problem is you got $2,000 in hand and 500 shares, and you got 10 minutes to make a decision. It is my intention to keep teaching you how to trade in this way so that you have this kind of problem every day. I'd love to see you have it every day or just many days. But this is the kind of a problem that you want to have. What to do with that market's money and what to do with that open position, and 10 minutes to decide. At some point, 10 minutes will feel like a lifetime. If I gave you 10 minutes right now, it might be hard for you to work through all the issues you want to think about, but that'll come with time. You'll become more time efficient as you go. But what I would like you to do is give me like a half-page set of ideas, and it can be marked up chart or it could be words on a page. Whatever you use to feel comfortable with, I want you to observe yourself go through your trading process and do two things. I want you to come up with your trading plan on one side of the page, and then I want you to map out your trading process on the other side of the page so you can just make a list of the things that you look at and think about, and then that's going to help you map out your trading process, and then that becomes the object for some analysis later. If you were one of my officers, I would order you to do it. I wouldn't even give you a choice, but because this is America, the land of the free, I invite you to try this on. What I would like to do is, if you can give me this plan by noon tomorrow, that gives me time to prepare and integrate the ideas that come in to talk about tomorrow night at 8. But and we'll get the first batch by tomorrow. And then really not later than noon on Sunday, then I can prepare a discussion for this on Sunday night at 8 o'clock. So I'll cover, the first set and then the last batch on the next 2 nightly podcasts. But this is an opportunity for you to integrate everything you know so far and put together a trading plan, and then use this as an opportunity to observe your own process, to use the daily reports to help you with framing data and all that jazz, and take it from there. Okay, so that's your homework, and that's everything I wanted to cover for tonight. We're an hour and 20 minutes into it, and what I'd like you to do is upload your file into Campfire so that you will have practice with that basic skill. If that doesn't work for you, or if there's any trouble, I'll also take an email, and Eugene and Lisa, if you want to upload it in Basecamp, I'll take it there too. Or you can stand aside and kind of wait and see because it's the first iteration. No problem there. But this is there's no cost on this one. This one's free. This is free chicken. And what you're going to find really interesting, and I know I'm going to find it interesting too, is seeing all the different ways that market participants might approach this trading situation. This is the most routine decision that we can make for people that trade in this style. This is exactly the kind of a problem that we want to have. We found a mover. We used our intraday skills to make bank in a disciplined way. We were postured for success into the close, and now we have a decision to make with some interesting things to consider, knowing that Monday is going to be another day and it'll be a volatile day, and what's the hurry? So what do I want to do with the open position? What am I thinking about for the over the weekend risk? How might I structure that decision if I want to keep it? And then what kind of ideas for continuation do I have for this symbol going into Monday? I can frame that trade on a one like a swing trading one day at a time, like mechanical framing and stuff like that. So that's the kind of stuff that I'll go through on Saturday and Sunday. Okay, so the download of all the slides and the packets are all on Patreon in the public area, so everybody can get it. And then you have my email and then the Campfire. So Lisa, I would ask you to check your emails. I've been sending you invites to the various like Basecamp and Campfire and the talent management system for the learning system. So I would like you to go through there and see if you can recover those. If you can't find them, send me an email and you have my email, and I'll get you re-invited once more, and that'll get you up to speed. Okay, so that's everything I got, guys. Thanks for hanging in there. Enjoy the homework. This one looks like fun. And then what we'll do is on Monday, we'll debrief what SPC actually did. And then your job would be to compare what it did to the trading plan that you set up. So you should plan to paper trade it, at least trade it forward on Monday. So I'm looking at you, Joe and Dave and Luke. That's required activity for you. Okay. That's all I got. You guys have a good, safe weekend. Happy May Day. Happy birthday, Dad. Thanks for everything. Blessings and support to all of you out there. Keep your wrists measured and your powder dry. All right, Lisa, I will resend them to you. I mean, I sent them to the same email that you sent me your email from, so I don't know why you're not getting those, but I will resend a whole batch. So you should be looking for an invitation to Base Camp, Campfire, and Talent LMS. And it's all in that initial, you got that initial email from VTI. And then I need you to go to patreon.com/Ken Long, like it says in that opening email. Sign up for the that $2 a month dojo level of support. Okay. Okay. Take good care. I tell you what, Lisa, if you can hang on for like a half a second right now, if you hang on right now, let me try sending them to you while we're still on the line, and then you can tell me if you got it or not. I've stopped this recording, so we're okay. If you can just hang on half a second. All right, so this is you, majors11@me.com. I'm going to trash that one and just send a fresh re-invite. So there's the primary and intraday mastermind is where we're going to do most of the work. Swing trading options and Forex or other specialty rooms for guys to chat and share ideas, but I spend my time. Well, I had cut and pasted it, so I was, hopefully it wasn't screwing up. All right, so this is going to be that talent management system. This is the one where the courses are hosted. Okay, so here you are. Yeah, I sent that to you on April 14th. But yeah, it's Majors 11. That's correct, right? Majors 11. Lisa, the replay for tonight, it takes usually about an hour or an hour and a half to process that, and then I post it on Patreon. I'm going to show you that here in a minute also. So I'm going to update you. So if you go to this website, and your password is I want you to notice capital TCM 2002, TCM 2002. L Majors. Oh yeah, there it is. It's L Majors. I have it. I have it correct. Sorry, L Majors 11 at me. So use that TCM 2002. You should be able to get into these courses. And then what you have for courses, 001 is just a demo of the TC 2000 bundle, and then 101 through 108 is the courseware for the hybrid trading. Start with the boot camp, okay? And then the let's go to this is tortoise.basecamp headquarters hq.com. It's in an email I sent you, and so that's why I didn't. Okay, that was only Majors 11. Actually, I just checked. That's the email that they sent me for you, and that would explain a lot. So here's what I'm going to do. I'm going to delete that one, and then just resend you a fresh. Let's see. Yeah, I'm going to resend you a fresh one. Now, have you and Eugene worked together at VTI? Just wondered. Not sure. I'm not sure. I thought maybe you were both the Super Trader program. Maybe not. All right. So Lisa Majors, lmajors11@me.com. That should be good. So I'm going to add you. Okay. And what I'm going to do is I'm giving you access to the hybrid trading project, and I'm also adding you to the Coaching 2020 project. So the Coaching 2020 project is guys that have been going through a lot of these lessons already, and the way they're using Basecamp as a learning platform is really impressive. They're doing a really nice job. So that will give you some ideas about how to use Basecamp yourself. And I want you to see the work that they're doing, and it may be that that there's an accountability partner in there for you too, if you like what they're doing, and maybe you introduce yourself. And the idea would be that it's very helpful to have an accountability partner who's going through these lessons with you, and you can share work together. And so I would encourage you to look at the work they're doing in that Coaching 2020 program, and then that's the kind of thing that I envision for the advanced hybrid trading people. And then you guys have your own dedicated project area just for those of us in that course through VTI. Okay, so when you get there, since you're here right now, let me just go ahead and show you what to look for, and this will catch you up to speed pretty quick. The email that you got from VTI should is just a cut and paste of this introductory project. So when you go to, you'll see on the right hand side those two projects, Advanced Hybrid and then the Coaching 2020. There's other ones that I run, but just Those are the two you'll see. So when you hit advanced hybrid trading, I want you to, what you'll see is all these files are different reference documents like presentations and memos and white papers and stuff like that. And then when you go to the write boards, a write board is like a editable discussion board. And so the getting started, 001 getting started, gives you the instructions on how to get started. So there's if you click that first link, it'll give you a YouTube video of what's going on in the course and kind of the concept. And I just talked through all these different sections, so I'll just let you read that. And then these are the resource areas and purposes. These are all the different places. So the Talent LMS is the one where you saw those courses. Basecamp is where we're at right now. Campfire is the chat room. Patreon is where I push those daily reports. Yeah. And then this YouTube channel, /Kennifer8, that's where I host the videos, public and private. And then go to webinar, you saw that's where we're doing this thing. So these are the getting started tasks. If you just go ahead and start chunking away at those, you'll get up to speed. Hey, the bottom line is you got a full year. I know the flyer says till like the middle of September or something. You got a whole year to get through this stuff. So, just start chewing on it and send me your questions when you have them, and we'll just get on with it. I will collect all the best ones and then do a focused session on that June weekend, 6 and 7. But if you have a question, I don't really want you just waiting. Yeah, I want you to do two things. The first thing I want you to try is try posting it in this write board. So let me show it. So this write board was the getting started one. On the student introductions, I'd like you to just put a paragraph introduction of yourself on that one for practice. And then between now and about the 1st of June, if you have questions as we go, I just want you to click on that write board and then do what some of the other guys have already been doing. And then you can read. This is where everybody's questions so far. So like, I forget who, maybe this was Eugene. Eugene asked me a bunch of questions, and then I answer in bold. And then Gerald from Singapore has asked some questions, and then the answers I have are in black. So all you got to do on this, when you want to, let's say you had a question, you would just click the button, edit this page. Then you would go, just scroll to the bottom, draw put a spacer in there, and then type something, and type Lisa. And today is 2020-0501. So then you would click down here where it says Save Newest Version. Then that updates it, and then I'll see that I will see that question down here. And then what I'll do is once a week, I'll come in here, and then I'll go to the end and find all the questions I haven't answered yet, and I'll answer them in writing, and I will record a video. And then my plan is to do a weekend video just for you guys every weekend. So that's almost like a preview of what we'll do in June. So if you have questions as we go, just go ahead and do that, and then we will have the June 6th and 7th to really just kind of reinforce all the big learning points, and then come up with a strategy for how to go from like June to September. So June through September, I'll do 3 follow-up sessions once a month with you guys where we'll again do one more just focused Q&A session with you, and we'll record all those. And then by middle of September, you'll be good to go. You'll be on board with the team by then, all right? No, you don't have to. You don't have to subscribe to TC2000 to trade these. That's just the package that I use for my own trading and for my analysis because the charts are beautiful. And but all these systems, you can put those indicators. I'd show you what the indicators are. And all those indicators are found on any reputable charting package. So whatever your broker has, you should be able to recreate these indicators and ideas, and you can execute on your trading platform. I would say this, however, um, Danny, who's in the super, I think he's in Super Trader 3. Anyway, Danny Ben Yair from Israel. So he's been a student of mine for a couple years, and he came to a couple boot camps, and he's taken all of my systems, and we've partnered, and he's turned it into a TC2000 bundle that is just amazing. And what it does is it recreates all my systems and indicators and filters and scans and charts so that you could actually get independence from my reports and all that information independence. We're selling that bundle for $5,000 because of how much time it saves people. It's a really good deal, and it's a one-time payment and lifetime updates. He does all the technical support, and we've already built a course in. If you want to see what it looks like, you can see it in that course in LMS 001. So he's got about 25 different things in there, different little mini lessons for like 2 or 3 minutes long. And that's a really good example of how to use dashboarding techniques to manage your time and define things. And it's also a demonstration of TC2000. So I say all that to say, because you're taking this course, you have $1,000 coupon off the sale price of that thing. So we're going to sell it for $5,000 until about 1 September. On 1 September, not sooner, the price may go up on 1 September. It won't go up before then. So you have plenty of time to think about it and look at it and fiddle around with the dashboard and make a decision. In my view, the reason to get TC2000 would be 2 reasons. Number one, if you didn't have a platform and you wanted something that really works beautifully and robust, then it'd be 4K with the 1,000 off. It's a great platform, and they have a brokerage firm now, and they have good reputation. So that's not a bad place to kind of get started. But the other reason to do it is to have information independence from my reports, because as soon as the market closes, that thing has it finds all the same signals that I do with my reports, but it takes me time to run them and publish them and post them and all that. And so for people that want to have absolute independence, that's a pretty inexpensive way to save yourself the time of programming and to have a bulletproof package for swing trading and day trading and hybrids. And TC2000s and this stuff all supports currencies, commodities, and equities and futures. So it's for administrative savings and time savings. All you got to do is figure out what an hour of your time is worth, and then do the math. So anyway, that $1,000 coupon is always there, and so that's everything I wanted to cover while I got you on the line. So can you check your email real quick and see if those invites came through? Okay, so we're good to go. We made that connection. Just jump in there. And the bottom line is, it's a good idea to partner with somebody for learning, but you can take this at your own pace. And whatever questions you have, you just ask them, and you can learn it at your pace. And that way, we're not all trying to work off of one standard pacing. All right. So you can work on it at your level. And I would just encourage you to look at the chat room and the Patreon, and No. You got a full year to learn all this material. Is how it comes down to basically. I know what the flyer said, but I'm going to give you a year's worth of access. So so there's no hurry and no worry. All you got to do is work at your pace. And if it turns out that other folks are working kind of on the same pace, or your partners, or whatever you want to do, then that will then you can learn this at your pace without any stress. Okay, and that way we can work like one to one, and I can work with everybody in a group where it makes sense, and then work individually where it makes sense too. And then through the use of the recordings and the classwork, like tonight's lessons, will get posted in about an hour, and I'll hang it on Patreon, but I'll also put that in as a lesson on one of those courses in LMS. Okay? Yeah, every night, all the way through May. So I've been doing these every night for the last 2 months, and all of those lessons, just like tonight's, are recorded, and it's in the LMS. It's in course number, I think it's 105. Hold on a second. No, course number 104. So if you look on your screen right there, when you go to course content, so what we did tonight was the strategy podcast. So starting on March 5th and March 8th, I was doing the swing portfolio speed run. That's like I did tonight with looking at all those swing charts, chart after chart. And then March 8th was the strategy podcast. That's where I looked like at the daily reports and the market health check and some of that stuff. So in every one of the strategy podcasts, there's like a mini lesson embedded, like the one we did tonight. And so those are all the lessons that you'll see. All right. So there is a ton of goodies in there. Each one of those is about an hour long. The closure report is the one that I now do that is like the end of the day and what happened and all that stuff. And the portfolio speed. So I normally do those two together. And then I do a separate strategy podcast now where it's more like longer term and some of the other trading lessons. And then the bar by bar details. Okay. So as soon as you get through the boot camp, you might go ahead and jump on this and get going. I think if you actually started, you could probably start around like 10 April and catch up and then go back through the other ones. But the bottom line is that stuff is all there ready for you to review. Okay. And I think the strategy podcasts since about April 10th onward have been really, really good. I mean, it's some of the best stuff I've done. And that's almost 30 hours of recorded workshop material right there. And we haven't even gotten through May yet. All right. So there you are. Take good care. And rest of you guys, we'll see you on down the road. You guys have a good weekend.